So hello friends, so welcome back to our channel again. So today we'll be going to look at the types of indicators and when to use the indicators and where to use the indicators. Okay, so there will be like around three types of indicators. Okay, so and we will be first looking at why we need the indicators. Okay, so indicators can help you to find the trends and the turning points of the price actions. Okay, so they will provide the detail about the power of bulls and bears, means like they will tell us that who is taking the charge of the price actions right now. Okay, means like who are in the control, either the bulls are in the control of the price or bears are in the control. Okay, so but the trouble in using this indicator is they contradict with one another. Okay, so means like few indicators will give us the bullish signal and few indicators will give us the neutral signal and few will give us the bearish signals. Okay, so means like there is like different types of indicators, so we just want to know that when to use the which indicators. Okay, so there is a three groups of indicators available, major indicators in the technical analysis world. Okay, so one is a trend follower indicators. Trend following indicator is like it will follow the trend of the market. Okay, so then one is oscillators. Oscillator is used to find out the reversal of the market, and the volatility indicator is to measure the volatility of the price actions. Okay, so the trend following indicators includes moving average, MACD, which is the moving average convergence divergence, and MACD histogram. Okay, so these are all few of the trend following indicators. Okay, but the trend following indicators are the lagging indicators, as they will give signals only after the trend reversal happens. Okay, so if you are in a downtrend and this moving average will give you the bullish signals only after there is a trend reversal. Okay, so this is like we might lose the initial trend, means like we are not able to find out where the trend reversal happened. So because these trend following indicators will give us only the signal once the trend has been reversed. Okay, so oscillators will help you to find the trend reversal. Okay, so there are few oscillating technical indicators which will help us to find the trend reversal of the stock price. Okay, so those all includes stochastic, relative index, strength index, which is like RSI, and the force index. Okay, these are all the few oscillating indicators which will give us when the trend reversal is going to happen. Okay, but so oscillator are the leading indicators which will give the trend reversal signals. Okay, so and there is like a volatility indicators. Volatility indicators include Bollinger Bands, average true range, and standard deviations. Okay, so these are all the volatility indicators which will help us to find out the volatility. So based on this, even we can enter into the trade. Okay, so this will measure the price movement regardless of the direction. Okay, so whatever the direction is, whether it's upward, downward, or it's a neutral market, this will give us a signal based on this volatility. Okay, so these are all the major groups of indicators. So hope you can get some knowledge, means like get some idea about when to use these indicators. Okay, if you are in a trend market, you should always use the trending patterns, and if you are if you are looking for any reversal, then you should always use the oscillating patterns, and if you want to trade based on the volatility, you should use this volatility indicators. Okay, so hope this is helpful for you guys. So please do subscribe to our channel. So thanks for watching.